Hey, what's up, Goku? A quick question. Why do they call you Goku instead of Son Goku? No, I just want to know. Bro, it's not even that serious. Like, they used to call me Woody. Well, it was a pet name. Like, your parents gave it to you. Why? I don't want to talk about it. I said I don't want to talk about it. All right, you're asking too many questions. You gotta go. Hey guys, welcome back to the After Hours. I'm the ATL Beast, and today we're gonna talk about foreign stocks in the market. Now, first thing you need to know is last week we had a rally inside of the tech market. Now, this whole tech sector, they went up and they brought the market with them. We saw new highs in the overall market, and when it came to the penny stocks, after this rally, there was a dip inside of market activity, mostly in the penny stocks. Now, that dip was brought up again towards the end of the week. Now, what brought it there was AHI. So AHI, this is a smartphone-based software that focuses on human-based imaging technology. Now, imaging technology, this isn't anything new. We saw something similar happen on imaging technology with BMR about a month ago, but now it's being brought up as another part of the tech rally. And we see this because it went from 40 cents all the way up to almost $4. That is 1,000% increase. Now, when we look at this, the surprising part is this had resistance. Now, the resistance was somewhere around $2. It broke through that resistance after volume overwhelmed that resistance. Now, speculators were attracted by the early spike that happened in the after hours the previous day. The first spike may have created the momentum. What really kept the momentum was the higher low that was created later that ended up breaking yesterday's high, creating more momentum. So when it comes to this stock, what happened is this went up with no obvious catalyst. There was no headline that came out, no SEC filing, nothing obvious. But we do know that it's a part of the tech and AI rally. And we know that because it's a part of the technology sector, and the products that come from this company can easily be disguised as AI products. It was the next unicorn that came from the AI rally. It also had the natural support of being a part of NASDAQ compliance. But overall, if you look at the headlines, when you ask the company what actually happened, why is your stock going crazy? No one gave an answer. No one knew. But if you go to the social media, they did their investigation, they did their job, and they were speculating as low as 50 cents. So the way these speculators think is, I need to hop on this before it becomes popular. I need to buy the rumor before the fact comes out. Because when the facts come out, people get scared because they see that as a signal to cover or to sell. Now, usually when you approach this, it's with the thought of this might be stupid enough to work, and it usually works. Now, sometimes when things happen, you don't need a reason. And the penny stock market is exactly that type of place. All you need is a reason, and sometimes you just need to have an imagination. Now, the rally inside of technology, they created a unicorn. Now, a unicorn happens all the time. The biggest unicorn that you've probably seen recently was HKD. When you see stocks that come from foreign soil, they're called ADR or ADS. These are American Depository Shares, also called American Depository Receipt. Now, this ADR or ADS, they're foreign companies that are able to trade some of their shares on US soil. They do this by having an agreement with the bank. Now, after they create this agreement, there's pros and cons to the deal. Now, the pro to going abroad when looking for investors is your investor base increases. But the con is you could lose money inside of the conversion rate from US dollar to the foreign currency. Now, we see this all the time when we look at Chinese pump and dumps. There's usually a conversion rate of 1 to 2, 1 to 5, 1 to 30, 1 to 50 sometimes. The most famous one we saw was HKD, where people wanted to make a lot of money. And we saw the parent company for HKD, AMTD, it had a conversion rate of somewhere between like 1 to 12. I actually don't know off the top of my head. Too much damage. But with these type of plays, we've seen conversion rates of 1 to 30, 1 to 50, and they would do a reverse split and then do nothing but trend down all day after those kind of reverse splits. The main thing is, usually when it comes to foreign companies, there's a lot of chaos. There's manipulation, there's pumpers, there's funds and banks behind this, because for the foreign company to be able to trade on US soil, they have to be backed by a financial institution. And those financial institutions, they have a plan. They are the manipulators. In the past, it took 60 million shares to run up to $2. Today, it needed 120 million to run up to $3. When you look at the move on this stock, there was no catalyst. The momentum came in after the first spike in the after hours. It caught a lot of speculators' attentions. And then once support held after a failed morning spike, it broke yesterday's high. And then later, it broke the resistance high at 2. But that was only after it failed. It failed the test of that resistance. And then the full breakout from 2 led the charge into 3. At that point, everyone believes this is eventually going to go to double digits, if not high single digit. And so this company comes from foreign soil. With that, a lot of people understand that it's an ADS, also known as an ADR. At the end of the day, you need someone to sponsor you when you're a foreign company. Now, the people that mostly sponsor these foreign companies are banks inside of the US. Now, the US will take some shares from the foreign company, like 10%, 5%, and they'll trade them on US soil. They'll get approved by the OTC market or the NASDAQ market. When they do that, they let these shares trade on the exchange, but they usually set up a trap or a plan. You're all small players and the big players are creating a play. Now, the play for AHI was it took 60 million shares about 6 months ago to bring it from under compliance to $2. Now, before NASDAQ complains that they're below compliance again, they used 120 million shares this time to get it to $3. Now, when we look at this on the bigger picture, when we look for immediate catalysts, we saw this had no immediate catalyst. But when you do your investigation and you look at social media, this was on people's watch list. It was on their watch list because it was a part of the technology rally. Now, it's a part of the technology rally in the direct and indirect way. Now, the company itself, AHI, deals with body imaging. They have many customers across various industries. Some of those industries include health, others in technology, and many more. But at the end of the day, their main products deal with looking to see if you have skincare problems. After they take an image, they scan your vitals and other metrics. Now, on the other side, they're also a part of smartphones and apps. It's a company that deals with a lot of software and data-driven products. Now, when we look at that, that's almost exactly what's popular right now inside of the market. But in this case, AHI was trading at 50 cents. That's way below its value according to the current environment, which is very, very sensitive to technology right now, especially things that can be confused for AI. They've recently had technology to where you don't have to use a credit card. You don't have to use Apple Pay anymore. Now you can pay by using your fingerprint. After having that kind of news come out recently and AHI deal with body scanning on top of recent NVIDIA news, things were bound to blow up. So speculators come in. When speculators saw AHI needed compliance, they were ADS as well as body scanning technology, which can easily be confused with AI. This became a unicorn. Now, this unicorn usually goes up 1,000+%. And you know exactly what AHI did? It went up 1,000+%. Now, is it going to stop there? That's a different question, because AHI and this tech rally, we have no clue where it's going to stop. But when you ask the people on social media, the people that originally came in, everyone's saying double digits. Triple digits is kind of far-fetched, but double digits, I think it's fair. At that point, we'd be going up 5,000% from where it started. But how long is this going to take? We don't know. Now, when it comes to the reason, the catalyst behind all this, there's actually no headline, no SEC file that made this possible. When asked for a comment, AHI didn't respond yet. But we know based off the technicals and our investigation that this was just another product that came from the hive mind inside of speculators. They saw this was the next unicorn to happen, and they missed CAR, they missed TOP, HKD, and all the other parabolics that went up to 70, 60, 50 in the past 2 months. Now, we also know that this is an ADR/ADS, which means it's a company that trades on foreign soil, but they took about 5 to 10% of their shares and they gave it to a bank, and the bank trades it for them on their soil. Now, that can either be the OTC market or the NASDAQ market. Now, if it's on the NASDAQ market, they have to stay above compliance, which means they need to hire a pumper. They need to hire a manipulator, which means if you trade AHI, you will be a part of a bigger plan. Now, last time, it took them 60 million shares to bring it to 2. Now, this time, they brought it to 3 with 120 million shares. Now, will it stop there? We don't know. All we do know is there's history, there's progression, momentum's in the stock, and it has all the hype right now. But there's no obvious catalyst, at least in the headlines. But do penny stocks really need a reason to go parabolic or to go supernova? No, because penny stocks all have the same fundamentals. They all have the same ending of the play. It's a tragedy. It's always a tragedy. You just make sure you have risk management so you're not a part of the wrong side. Now, AHI, it wasn't the only thing that traded with no catalyst this week. We also had FRZA, which went up to its resistance and fought a little bit. This is a recreational vehicle company. Now, normally when you think about this, you're probably thinking of a car. Well, in this case, this stock went up 200% and it has a history of running. Now, when you look at when it IPO'd over a year ago, it came onto the market around $7. Since then, it's traded up to 14 and trended all the way into single digits. Now, when it comes to FRZ, this one went to double digits when it IPO'd, but since then, it hasn't hit double digits in over a year. But what you need to know is it has a spiking history, and so people expect it to spike in the future. But as for a catalyst, meaning any type of filing to the SEC or promotion of a news runner or just something reasonable to explain why the stock is going up, you didn't find that on FRZA. But we did see something on social media that gave us an idea of what it could have been. This spiked on Monday, and the only thing that kind of made sense was this one tweet. This tweet pretty much hyped up the new boat that came out for FRZA. It said, get ready for something extraordinary. They said it's going to change the industry. At the end of the day, any advance in technology is really popular right now, including boats. And so this went up 200%. Now with FRZA, it was not the next unicorn. It traded sideways for a week. It was very choppy. FRZ had some very violent swings. It's a small cap and a part of the low float. Now, people expect the FRZA to be a strong mover inside of the tech rally, and so it spiked with no catalyst. Not as impressive as AHI, but it still works. At the end of the day, the foreign company, they increased their investor base, but the con is they probably lost a little bit inside of the rate flux when they converted their currency to the US currency. That's all I got for you today. If you like what you saw, hit the like and subscribe button, and I'll see you in the next video. Peace.